Hello dear students, this is Ritu Jindal from SDKL DAV Centre, Senior Secondary Public School Mansa, Punjab. I am here to discuss the topic Rules for Debit and Credit. These rules are most important because these are the basis of recording, and recording is the first function of accounting from chapter Journal of Plus One Accountancy. Now dear students, let's start the topic. Debit and credit. Before discussing the rules regarding it, we should know about the meaning of debit and credit. Accounting is based on two systems, double entry system and single entry system. According to double entry system, each and every transaction has two aspects. And due to these two aspects, there is the birth of two words, and these words are known as debit and credit. One aspects to be debited and another aspects to be credited in the books of accounts while recording the transaction. So now here again one question arises, which aspect should be debited, which account should be debited, and which one to be credited. Before discussing this, we should know about the rules, type of rules of accounting. There are two rules of accounting, traditional rules and modern rules. Traditional rules are according to three different accounts, personal account, real account and nominal account. Now first, rules for personal account. Person may be receiver or may be giver. Whenever the person will be the receiver, the account of receiver should be debited. And when the person is giver, then the account of person should be credited. According to personal account, debit the receiver who receives something and credit the giver who gives something. Rules for real account. Debit. Real account means account of all the assets. Either the asset will come in the business or asset will goes out from the business. Whenever the asset will come in the business, the account of asset should be debited. And whenever the asset goes out from the business, then the account of asset should be credited. Rules for nominal account. Nominal account is related with the expenses, losses, incomes and gains. Whenever there will be the expenses and losses, the account of expenses and losses should be debited. And if there are incomes and gains, the account of income and gain should be credited. So personal account, debit the receiver, credit the giver. Real account, debit what comes in, credit what goes out. Nominal account, debit all the expenses and losses, credit all the incomes and gains. Now modern rules. According to modern rules, if asset will increase, then the account should be debited, and will decrease, the account of asset will be credited. Liabilities. Liabilities will be debited with decrease and liabilities will be credited with increase. Capital. Same thing with the liability. If capital will increase, the account of capital will be credited, and if capital decrease, then the account of capital will be debited. Revenue. With decrease, the revenue account should be debited, and by increase, the revenue account should be credited. Expenses. Expenses increased, debit. Decrease in expenses will be credited. Modern rules are just like the extract of the traditional rules. Same hai. So now let's take the examples for discussing these rules. Goods purchased for cash. Here two accounts are there, goods and cash. Goods account is real and cash account is also real. So the rule for real account will be applied. Real account, goods comes in the business, so it should be debited, and cash goes out from the business, the account of cash should be credited. Cash deposited into bank, cash account is real account, bank account is personal account. The rule for real as well as personal both are applied in this case. Cash deposited goes out from the business, so account should be credited. Bank, personal account, bank is the receiver, so account of receiver should be debited. Now dear students, that is the end of today's session. Thank you very much. Have a nice day.